Okay. Oh man. Well, welcome back everybody. I said I was gonna do this over the weekend. I watched the Super Bowl and got drunk instead. Sorry. But we do have a good amount of stuff to go over. First and foremost, we definitely need to go over what I talked about in the last video and see where we went wrong, and then basically draw on from there. So I believe in the last video we were looking at the idea of an ending diagonal before breaking up, but it was very, very clear in mentioning that a break above this wave 4 high to the downside at 119 would invalidate the bear case. And I mean, obviously we broke above that, and so hooray, you know, our low at 86.29 looks to be the lowest this thing's ever gonna go. So hey, that's cool. But now we need to, you know, figure out where we're going next, figure out why the previous assumptions were wrong, and draw some more targets, because shit's about to get real, man. Like, especially with the developments we've had over the past week or two, like, oh my god, there is so much fucking money to be made. And so with that being said, let's dive right in. And I think to start, I'm gonna show you guys the count that I was eyeing at the beginning of the week, and obviously that has fallen through, but I'll show you guys why I like that one so much. I think I just sent it. I was in the messages. Oh yeah, I was talking to my boy Jay Rowland. This guy's a genius. If you guys don't know him, this is a super trend guy, super nice dude. Check out his stuff. But I just sent him, where was it? Sorry. Is it this one or is this the? No, that's the current one. I sent bum. Oh my god, dude! I sent so much bullshit in here. Okay, yeah. This is what I was looking at before, and let's see where he went wrong. So first of all, the correct order of colors to look at is it's gray within orange and orange within blue, and then blue within red, yada yada yada. But all we really need to look at is, all you really need to understand is that the smallest degree is the gray, and then within that is the orange. And so I was looking at this first because I, for one, the idea of this is a lot easier to make money on. You know, if I look at 1, 2, and then 1, 2 down, you load right here, you make a fucking killing on options on that move. But obviously, that would be too easy, and so that's not what happened. And so we need to dive in and see where that fell through, and then, you know, what developments, like what that means moving forward. So for one, the reason why I really like that count was because I believe the other day I mentioned that it was very important to pay attention to the ticks. And looking at this move up as our wave 1, this ticked 116.65, and I talked about this in my last video. And so what we'll do is, let me go to like a clean view. Yeah, so what we'll do is, fuck, don't duplicate. Right, so what we'll do, we'll take our price level and we're gonna put it right here at the high of the supposed wave 1. And here's the thing, if we're looking at it like 1, 2, 3, 4, and there's our issue. And this is why, a bit of a fake out, I'm not gonna lie, but you know, we ticked right below this level. And in application, whenever you see your wave 4 break into the territory of your wave 1, your first instinct should be that, okay, this is not impulsive, because that goes against the rules. But then you also have to consider the idea of a diagonal. And because this is a wave 1, this is not a wave 3, you have to remember that. And so what that means is wave 1 and wave 5, you're allowed to have wave 4 cross into the territory of your wave 1 in something called an ending or a leading diagonal, depending on the wave. And because this is a wave 1, this would be something called a leading diagonal. And so what we'd expect is to, you know, keep this formation going. I'm sorry, we go from here, bring it up to the 4. But the thing is, I mean, if you look at it like this, but and there's like a bunch of other ways to draw the trend lines. If I go back to the other one, or not all, actually, yeah, this is fine. So yeah, looking at this again, right, you get the idea. But finally, let's dig into intraday and like kind of see what the hell is going on. Now, looking at this, you know what? Actually, going back to this, let me show you the count that I'm looking at now that I believe makes the most sense. And that would be this one. And I mean, you can just look at it and you can kind of figure out what's happening. But the way I see it is right now, this is the wave 4, and wave 4 is always going to be an elongated sideways type correction. Wave 2 is deep. So keep that in mind, right? That's just the basic rules of alternation. And so looking at this as a wave 2, right? Strong move up, strong move down. Pretty simple. And if we take fibs, and I mean, I've showed you the subdivision of this before, but let's just look at it super basically. From the low to the high, we're looking for at least 618. And right, we take below the 618, came down to borderline 786, not quite. And again, I I'm not going to break down the subdivision too closely, but it checks out. I've showed you before. And then next, right, we would expect our wave 3 up should be at least 1 to 1 of 1, but usually we'll see either the 1 2 3 6, 1 3 8 2, 1 6 1 8, or in super bull markets the 2 6 1 8. And in this scenario, we take the 1 2 3 6 almost perfectly, right? Boom, one tick here, and start to sell. I think it's that one. Yeah. Okay. So we see that. We know there's some sort of relationship with that move. 1 2 3 up to here. And then finally 4, right? Your wave 4 will retrace in an ideal world 38.2% of the wave 3 up. And so to draw the fibs, you're going to draw from the wave 2 up to the 3, not from the start of wave 1. It's going to be from the low of the 2. And I have the whole thing is here, but the 382 level comes out to 117.8, and obviously we broke below that, and I talked about this before. That was a bit of a throw off, but again, right, you kind of have these trend lines drawn out, and you, like today, we broke out, or yesterday we broke out of this trend line right here, and we made what was previously resistance became support, and that supported this move up to here. But again, now that let's dig in a little bit more. So at first, I think it was Monday, I tweeted out like a super, not precise, but I was like, I think it'll happen exactly like this. Let me see if I can find it. Yeah, this one. I was like, it'll go to here, recover up to here, drop to here, start recovery here, finish here. And the reason I said that is because, actually, I'll just go to like the Discord because I don't want to redraw all of it. I think if I go up to, yeah, right here. Okay, so I was looking at this, right? Pretty much same exact type of formation. You have, strong move up, lower high, recover down or drop down, flat into after hours, slight gap up, and then dump. And we're looking at the same sort of pattern here, and that really supported the 1-2-1-2 prediction or forecast. That obviously didn't come true, but the first half of that was right. So that was, at least we made a little bit of money on that. But tying back into our idea of alternation, right? Because this was a simple correction, ABC simple zigzag, right? That would imply that our wave 4 will be a more elongated, complex correction. And so what we're looking at now, or at least what I'm looking at, and this, this could very well be wrong, but what I think is most probable based off of current price action is what we're looking at is something called a running flat. And you guys have heard me talk about this before. Real quick, I'll just pull up the subdivision visualize. So if we go to Elliott wave flat correction, go to images, just so you can understand the subdivision and see that I'm not just pulling it out of my ass, right? Like this. Okay, yeah, perfect. Right, this one right here. This is the idea that I'm buying into the most right now. And again, I say this because of our rules of alternation. 2 being a simple correction, 4 should be an elongated, slightly more complex without that deep of a retrace in comparison to wave 2. And now we need to dig into our ratios and how this came about. So first of all, A should be 3 waves, B should be 3 waves, C should be 5. A, B, C, A, B, C, B. 1, 2, 3, 4, 5, C. And again, we can look at subdivisions, and so we'd expect. So if we look at A down to B, C should be 1 to 1, a little bit below, but it checks out. And I mean, if I go deeper, like if I look at it like, oh, the ABC within the ABC, right? Then there's a perfect 1 to 1 tick. But now we have, so that's the first leg. That would be A, as marked by the A right there. And then B, right? Same thing, but to the upside. So if we're looking, I'll clear this out so you can kind of see the process, right? Again, so we look up, A, B, and then C. C equals 1, 2, 3, 6 of A. This morning, a bit of a fake out, right? We ticked the 1 to 1. Like literally, I think the level was so many levels, 130.78, and we ticked 130.75. So a little bit of a fake out if you trade the same type of Fibonacci that I do. I was asleep, so I didn't even fucking see this. But right, so we have subdivision that supports the flat so far, and then again, right, what we also need to consider is that flat meaning A, B, C, all of these moves should be proportionate to each other. And so what we'll do to confirm the trend even more is we'll measure the A down, and B should be about 1 to 1. And again, tick a little bit above, but with the subdivision, we have this little area between 131.81 and 132.65, I believe, or is it 0.92? Saying, okay, close enough. But So we see that. Okay, checks out. And then finally, I have it drawn already, but the 1-to-1 for C equals A comes down to 117.22. Okay, fuck, where was I? My shit just cut out. Yeah, okay, what was I saying? Oh yeah, the gap. Okay, so we'll pull up an hourly just because you can visualize it here a lot better. This is interesting, isn't it? Look how the 1-to-1 level comes down to fill the gap literally to the tick. The gap is open from 117.3 to 119.1, and I'll draw this little box so you can visualize it. Right, the box is looking like that, and our low level coming down to, look at that. It's just cool to see you seeing that type of shit happen. And again, if you're looking at the proportions, you'll see that because the A or the B came slightly above the top of the 3, the C should finish slightly above the A. Right? And if our A came down to 116.14, the C would be finishing about $1 above it. And that's just that. That's that explained. And obviously, if it rips up, that's invalid. But finally, tying it all together, assuming we come down to 117.22 and the bottom isn't at 115, that only changes those targets by about $1 or $2. But again, tying into the idea of the diagonal, if we're looking at 1, 2, 3, 4, or 4, doesn't matter, pretty much the same thing, then the 5 should come up and finish between 144.5 and about 152. And then again, let's go back to the trading view and, oops, sorry. Oh my god, this is like such a process. Such a process. So, I mean, but hopefully you guys see, like, me running through this shows that it's not bullshit. Like, this is a very methodical process that takes a lot of time. But right, that move to 150 would basically be this right here, and then boom. And again, the timing isn't to scale. What I think would make the most sense is if we came down to here tomorrow morning, then we begin to rip up for the rest of the week, come up to 145 to 150-ish. Going into next week, it gets killed down. We come down, we sell really, really hard into the 24th, and then we just explode. And again, the reason I say that is because the 24th of every third month, we know what happens. February 24th, last year, $40 to $200 in one day. I guess it was after hours. But then we go to 224, what's next? 524, this cycle right here, right? Same type of thing, 824. This was awesome, this move. This was totally accounted for, and we caught this move entirely. That was fucking sick. Again, here, so this rip up here wasn't the 24th. And I mean, the 24th actually came a little bit later, but people were starting to catch on to it then, and so they ripped it up a bit early and then they killed it down. But again, right, just like the way the dates are set up. So that was November, and then finally we're coming down to February part 2, resurgence, which is pretty fucking exciting if you ask me. But I think I've covered about everything. That should make sense. Is there anything else I need to go over? I think not. I think I covered it all. Well, with that being said, you guys know where I think it's coming if we come down, and if it rips up. I lean to the bearish. I lean coming down to 117 first before we start to rip up, and I only say that because of the rule of alternation. But then again, GameStop is super manipulated, and reading into this type of stuff is very helpful. But it's much easier to draw it out than it is to act on it in real time. But with that being said, that's not an issue in the theory itself. It's more so the application, and I am I'm no expert in this by any means, but I'm getting better at it. And so, yeah, sick. Thanks for stopping by. Hopefully that cleared up where we're at, or at least where I think we're at. And again, I could be very wrong. I don't know. Like, it could just fucking rip up to the 200 plus. But again, I'm really buying into the idea that we're going to see this type of formation like what we saw in August, right? Rip up, rip down, right? We're running up from the beginning of the month all the way till like the 16th, 17th. And then the next 2-3 days, it gets killed down. And everyone's like, oh, man, fuck, I thought it was going to rip, right? And then the 24th, we go from, like, 160 to 220 something. That's like, I'm talking really fast. It's like I should run an auction or something. And I'm not even baked for this, but I'm going to go get baked for editing this. But hey, cool, thanks for stopping by. I hope you guys learned a thing or two. Or maybe you just like to hear me ramble and look at my charts. But cool, thanks for stopping by. Until next time, peace.